Hi guys, lot of teenagers nowadays has lacking of money. It's just now people going from college they ask to borrow money from the parents like mother or father, and they doesn't give money also. So not asking their mother or father is not a wrong as basically. So they doesn't have financial freedom. Now I'm going to teach how to get a financial freedom at the age of 20, and the starting our policy next after 3 years also we're gonna have a huge amount of money. Promise me guys, this is not a simple joke thing before skipping this video. So see this video until the end and share to your friends also. Now what's the which I'm going to say investing basically. The investing is not a joke. Basically now investing you want to beat the inflation. Why you want to beat the inflation? Tomorrow the money can go the rise up for a lot of things also. So in that beating inflation you guys has to invest. A way to invest like mutual fund, SIP. I'm not saying about trading a stock market or anything like that. So I want to say a secret thing that basically nowadays people is trading out of it, and that people are getting a lot of weight also. So but this trading does not happen only 1 or 2 days. It has to wait of patience, and this patience you guys have until for watch the video fully. So you guys don't have patience to watch the videos fully itself, then you don't have patience to invest itself. If you invest that thing, you get a huge amount of money end of the day or end of the year or end of the whichever things you want to invest. So watch until the fully the video. You'll have a insightful and have friends everything. So not more this. Come let's go. So guys, why do you want to invest in rather than SIP, mutual fund or trading? Why should I invest in these things now? So what is the thing is gold and silver, guys. So why should I should invest in gold and silver? See guys, in this world everything is uncertainty. When war happens, that stock market will crash off and other things will go down. If something coronavirus or something other viruses or something other pandemic things happen in the world, everything gonna shut down basically. So a lot of things chaos can be happen, but one thing lot of every centuries what happen is the gold rate has not been reduced at all every year. Just imagine from king side, from the Alexander, from the Egyptian, from our India, every king gold has been married as a precious metal basically. And if I say the gold is not only from our world itself, it's not from place of earth. Gold, that's a basically it's a stone asteroid which hit on the earth billions of years ago. What if I say? That's why you can't even duplicate the gold basically. It's a limited edition and so demand is more, the supply is very less. The gold reserves mostly have in the America 60% gold reserves back by America. You see mom or dad or father grandfather who was they try to buy jewelries. Why is they buying jewelries? They put so much of gold in marriage and they make to marry them. That's simple because gold's an investing thing. Many of yours may also know the gold is investing. Now the biggest question is, where do I invest? How do I invest? Which app do I invest basically? So nothing but you have to know three things about the gold. So one is physical gold, as a digital gold, and as ETF. Now what is these three things, Darshan? What is made? So physical gold is nothing but your mom or dad buy as a physical gold as jewelry or silver bars or coins. So that's how the physical gold works. And digital gold is nothing but a person who cannot buy the gold at same rate. Basically, there's a lot of apps like jar and other, you can invest in phone pay or other places also. 10 rupees daily or month end of the year, it will at least half of the gram will be when 6,000 rupees estimated, or you get half gold coin of half part of gold coin like. So that's how basically digital gold works. And ETF is nothing but exchange trade fund. So exchange trade fund is nothing but you don't physically own the world, but in name, like imagine you basically trade the gold. Now what's rate is 12,000 is the today's market. After 1 year it becomes 30,000 40,000. You basically want, you can't redeem the gold. In digital gold you can redeem the gold and you can sell the gold also, but in ETF you can't sell the gold, so you can't redeem the gold. And so that in stock you can do things. See, this is what you now what if I say the simple example, I'll show you a chart and other things, so where you have to invest. How do you invest? See that thing and come guys. Hi guys, as I said before, so you guys know the physical gold, your digital gold and ETF. So why 10, 9 lakh, 10 lakh, 10 lakh is basically physical gold. When you get a physical gold in hand, if when you sell it after 1 year, you will get 9 lakh. After selling the digital gold, you get 10 lakh, and what after selling the ETF after 1 year, you get 10 lakh, 78,000, 34,000. Now why this all? Because you have to know this before knowing this everything. You have to know one basic thing, how the charges and how the wastage charges and how the GST and how other things works. Basically, this chart I'll explain before I explain this, I'll show other chart like another like this table that will explain much more clearly, and then I'll come to this thing. So as of now, you guys see I took an investment capital of 10 lakh, 10 lakh, and 10 lakh for three also. For 10 lakh, for annual say GPR for gold rate is 12%. So we'll take 10% as a here you guys see we can take 3 years or 3 years will take 10 lakhs for 10 years actually. But before that 10% um i- I mean yearly increase, here you see GST. So before investing you have to pay 3% of GST for your 10 lakhs. So but here why is there is no, because there is no physical object. Here three also is physical object. So two was physical object, there is no physical object. So that's why. Other charges is basically making charges. When you buy physical gold like jewelry or something, you are having making charges for that. But here you are buying small quantity of amount, 10 rupees, 20 rupees. There is no directly physical like other charges. Here you're having physical object, directly trading. So you're making a liquid cash. So there is no making charges. And totally invested is 9 lakh 30,000, 9 lakh 70,000, and 10 1 lakh 10 lakh basically. Now this amount paisa investing after this all reduction. Now 10 years you're going to take for 10%, and for per year it will take 14 lakh, after 15 lakh, and after 10% it will go on this much it will increase. Now here you guys see the total growth after 10 years, 24 lakh, 25 lakh, and 25 lakh 93,000, 25 lakh of 15,000. So if you guys see 3 years, so this three, the annual growth by 10%. If the 10% constantly increase means you will get this much amount. So now next thing is expenses. Now expenses ratio is nothing but how much you sell this thing. So if you sell this thing, you will be having some uh, ratios, expenses, everything. So that will take a brokerage fees. Like I'll tell another brokerage fees here. There. So this thing will help you. So this one lakh. And next one is delivery charges. Delivery charges here nil and near nil. Why you have 5,000? Basically, this is why you have 5,000 because you're buying in a small quantity. So gold is basically buying in like kgs and other things. Basically, grams or 10,000, 12,000 as of rate 1 gram. But here you buy 10 rupees, 20 rupees, 30 rupees. That's why, because you don't have that much amount to invest, but accumulated amount will be invested, and there'll be, that's how this thing. If the wallet person who's having this digital gold, you're investing some apps or some people will be invested, right? Those people, what they'll do, like the apps like people, those people will take an insurance, because if the product has been damaged or robbed or anything, this insurance will claim this thing. So this is why it's 5,000 over here. And next one is spread is now basically, just example, for example, if you're buying iPhone, now iPhone you're buying and you're going to sell that immediately for another 1 minute, 1 minute you buy it, and that minute you're going to sell that iPhone. That iPhone will be same rate, wouldn't be, right? You're going some 2-3% depreciation charge for the thing. But if you want to sell the thing at that moment, it won't be the same rate. So you are sell it in the depreciation. So this is where same here also. So physical gold in 5%, and digital gold is 2% actually. The according to the sellers of the app you're using, according to this will be varying. And here there's nothing, because there's no physical object, so you doesn't need anything. So there's no spread for this thing. So according to market rate, you're going to sell here after 5% of these things, or you will get here how much percent you are to everything. Brokerage charge is something, but the whichever platform like mutual, like what a stock grow or something, whichever going to use this thing, here minus will happen actually. And next one, you get no tax whenever you try to invest or redeem that thing. The tax will be, because this is a long term capital gain. So you see LTGC, so long term capital gain tax. So this is a capital. What you're investing is a capital for you basically. So capital for just say for a home or something, a life. So this is long term capital for 10 years I invested, right? So this long term capital gain tax will be added, and upon the percent will be added. For example, here we took 1,64,000, it will be added after. uh, Now these things, after deducting this 24 lakh, this everything, you'll get cash on your hand. For physical gold you'll get 21 lakh, and for digital gold you get 22 lakh, and ETF will get 21 lakh. How much it has been, like how much percent we lost from all this calculating? 6.46% here, and 6.74% we have been lost here. So nearly we lost nearly 1,47,000, yeah, 1,40,000. So this is how you should guys calculate everything. And now why this are calculated? Why I said, right? Um, why here we get physical world 97,000, 10 lakh, and 10 lakh here. So basically this calculation. This all you have to calculate, and that's how the 1 year you getting it. So this is how this three. So you guys see this, and I'll show another like the bar graph. That bar graph you see another beautiful example. So guys, I took another again same example. So here guys, why is this bar graph also? So you guys understood why this is increasing, and here why is this bar graph. This is this bar graph. So if you try to invest in ETF, it's for 5 years gradually increasing, because it has no deductions and no small brokerage fees, and there's no long time capital gains much more in this thing, but unless like this too. So this has been long, like you in returns you get larger amount. But you see digital gold also it's equally to get, but physical gold you won't get, because you have the making charges and other charges and other things. That's why you're getting a lot of things, and you spread it. You go sell in app different rate, and you go sell in physically it will be in different rate. That's why physical gold is a different thing. But digital gold, there which app you went by, that app will decide how much spread this is. So here it doesn't spread at all, because directly stock in like stock market, like is selling, that's it, how in that money. So 5 years ETF is the best choice, but in 10 years it's not a best choice, because in 10 years ETF has a lot of capital gain tax and lot of other things. But digital gold, it's not that. You spread, it will decrease, and selling time also, and this has much more advantage in this thing. So you guys decide and wish to buy, or for 5 years it's better for ETF, and 10 years better for digital gold. But if you guys think physical gold is better, you can go basically. So 3 years investing, 3 years will get profit, but which will get more profit, that you guys depend upon your ways. So just see how it's. So coming back again, so guys, you saw all these things. So basically you understood what is ETF, what is gold, digital gold, and what is these things. Now why I'm doing this all is because you guys to get financial freedom. I'm already started this thing. I'm getting into financial freedom, so you guys getting financial freedom. So asking parents, or asking your friends, you can start investing by yourself today onwards, or tomorrow. Don't do it tomorrow, just from today onwards start investing. And end of the year, or the 3 years or 5 years has shown the graphs that you're going to get huge amount of money in the days of college also, and you're living a career, or like getting married or something, getting old. It can be whatever. So you can get a lot of money out of these things. But you have to remember these things, what are tax, or what are the things, GST, other things. You have to remember these things, and you have to calculate according to that thing. So now where do I invest? Basically I invest in the name app called Aura Gold. This Aura Gold is basically a 10 rupees. If you can start from the investing from 10 rupees daily, like ring it, and so ring it, you start saving the gold. Because why now I am saying this gold to be save and invest? Because just imagine if saving 10 rupees today money, and you want to buy tomorrow tomato for 10 rupees a kg. But tomorrow kg 10 rupees tomato would be the same rate? No, it won't be. Basically because of inflation, because of world global economy, that 10 rupees tomato for 1 kg become the 20 rupees tomorrow. But what if say to today, what if you invest today at 10 rupees, that will become 30 rupees tomorrow also. But what is that 30 rupees? Again, you buy the tomato for 30 rupees, and 10 rupees it will be still remaining with you. This is what inflation works. So that's we want to pray the inflation. So saving, start investing. That's what I will come to say all about. So say to your friends, guys, this is a perfect video to share the financial video with all the live example I will came with you. The real case study also. This will be helpful, and until you guys watch and so Aura Gold is the best app. I invest in that thing. So it's upon your decision. You can invest also, can't invest also. Now, have a lot of research about things. What I say also, have research about 2-3 videos also say regarding about it. Then you start investing, and you get clarity on mind. So thank you guys. See you on the video.